Gold prices are consolidating near record highs, supported by expectations of Federal Reserve rate cuts amid weaker US economic data, including rising unemployment. A softer US dollar and persistent inflation concerns have driven demand for gold as a hedge. Central bank purchases and geopolitical risks further underpin gold's strength, though technical indicators suggest that cautious trading. Silver is signalling strong bullish momentum. The rally is driven by inflation hedging demand, a weaker dollar, and technical breakouts from multi-year consolidation. The outlook remains positive in the short term, though profit-taking and overbought conditions may cause pullbacks. G'day folks, welcome back to another update on gold and silver. Before we go any further, make sure you hit that like and subscribe button to support the channel. Also, for some added benefits, visit the Patreon page where each month for the cost of a cup of coffee, we scan bullish moving shares across global regions. Also learn how to draw the indicator shown in this video, follow the links in the description below. So first looking at silver on the trends, we always look at the long-term trends, so the monthly, the weekly and the daily. So on the monthly, first off, we've got the CCI 150 down here with above its moving averages. Likewise, the price is also above its respective moving averages, giving us a nice bullish move since that was started in March 2024 when it broke above that moving average. On the weekly, that's actually broken down below the moving averages, giving us a bearish signal, even though the price is still moving higher. Now that was in response to this bearish divergence, these lower highs on the CCI versus higher highs on the price. And I've drawn a target range here between that 23 and 38% level. You can see there it broke down and hit that range, and it's now starting to break out of that. So it might have already completed that bearish divergence. And likewise, the CCI is also returning back to its moving average. So again, predominantly short trades. If you're trading this on the daily, predominantly short trades only. Even though the daily's broken higher, be very cautious about going long because the weekly is still showing bearish movement at the moment. But on the daily, you can see here it hit this key support at 34.87, broke down. It's been bouncing in this minor support resistance range. The support at 30.11, 30.11, and resistance at 32.96. And it's currently approaching that resistance, as I said, with this bullish movement on the CCI. Now, if you're trading on the intraday, we only go long according to the daily trend. So if we go to the intraday chart, in this case, I've got the 1 hour. You can interchange this with your own intermediate time frame, whether it's 2 hours, 15 minute, etc. So at the moment, we only take long trades in accordance with the daily. So you would have gone long during that little period there when the CCI broke above the moving average, and also when the price broke above its respective moving average. And that would have been a nice little trade to take. Now I prefer to take profits when the CCI touches that moving average range. So you would have got in on that candle and got out on that candle, if not a bit earlier, but that would have been a bit premature, but on that candle at the very least. And that would have been a nice little return. So for example, from the close of that hour down to the close of that hour, you would have made just under 2% return, which is a pretty good time frame for the 1 hour return, about 59 points on that one. So again, going long only in accordance with the daily. At the moment, that would have been a false break there, but notice the CCI is dropping off, so just be careful of that as well. And you would have got out with a small stop loss if you're using stop losses there. But at the moment, it looks like it may break above that in the next couple of hours, above that very narrow moving average range on the CCI and the price chart. So gold has got a similar pattern. So if you look at the long-term trends first on the monthly, nice bullish run, but notice the CCI is pulling back towards its moving average, so be careful of that. Back here we did have a long-term bearish divergence versus a double top on the price. That actually broke down, hit our minimum target range of the 23-38% range if I put in a Fibonacci range there. Then it finally broke down, probably around the 50% level, before bouncing up from there. But at the moment, as I said, it's pulling back towards that moving average range, so be careful about going long. On the weekly, we do have this bearish divergence, and that looks like it may have already completed. You can see there it's already pulled back, hit its target range at 23%. That's a minimum target range, and more than 90% of the time it hits this minimum range. But notice the divergence has actually hit this minimum target range, and it's still in a decline, so just be careful about going long if you're trading on the weekly. Now on the daily, we only take short trades if you're trading on the daily in accordance with the weekly. And you would have been wise to take some trades back here. For example, let's go back to that point. And you would have gone, from this point here. You would have taken a short entry there when it broke below the moving average range of the price. And it's also below the moving average range of the CCI. And you would have got out near on that candle there. So we'd have made a nice little gain on that daily trend there. And enter again short there. Now notice this, the CCI, the price hasn't broken below the moving average range, even though the wicks did. You have to wait for these candles to complete before entering a trade, and you would have avoided going short during that period. And here at the moment on the daily, it's going long. And that means, what does that mean? It means on the intraday, we take long trades only in accordance with this daily trend. So that begins probably around there somewhere. Yep, so you would have gone long on that candle there when it broke above the moving average range of the price, but also the CCI. And you would have got out right near the top there on that candle there when it hit the CCI hit the moving average range. And that would have been a nice little trade to take from the close of that one to the close of there. That was a 16-point gain on that little hourly trade there. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again and see you in the next video.